Hey, good morning, everyone. Welcome to the room. Hope your week is off to a good start. Yesterday was a pretty good day. We're not going to have much of a gap today, so probably going to open up with a pretty flat breath, but I'm hoping that changes. Some good signs yesterday and a couple days last week. So, from a daily perspective, yes, we've sold off, but we do have this big ascending triangle. And the line I'm looking at is the 59.50 and a quarter because that is the weekly swing low. That's this this candle back here. You can see, 1, 2, 3, 4, basically 5 weeks of consolidation up in this triangle area, making just about the same high and 3 times, triple top, and then making the higher low. So that makes the prior swing low is always where we want to look to, and so that 59.50 and a quarter is that level. So we'll see if we come down and form, some kind of hammer and close up towards the trend line again this week, but we will want to pay attention. So the daily, this 23.75, that's the daily swing low, and that has been broken. And so technically, we can draw a 50% retracement short off of highs to lows, and that would kind of put us on the backside of the trend line as well. So I'll keep my eye on that. If we flip to the actual fib chart, we're just coming back down to retest the 50% that we've kind of traded this would be the third test of it. First time came close and then traded all the way to 61.8, took off again, and now we're coming back down. Let's see. Check, 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 check. 1, 2. Mic check, 1, 2. Can I get a quick audio check? Can you hear you? Okay, let's see here. Look like 1 or 2 people were having trouble. Okay, cool. So now that we are kind of retesting this 50% on the daily, if we go to the left of the chart, we have just a real big kind of a mess or a big cluster back here. It's not like we're coming back to prior highs because this whole, from December till now, we really haven't gone anywhere, just moved sideways. So, yeah, we're kind of at a bigger inflection point, more so breaking the uptrend line and the potential of, do we come back to it or do we sell off and take out the swing low? So that's what I'm looking at. If I go a little bit further out, you can see the trend lines down here are just carrying out or swinging out from longer term general trend. So this is the COVID sell off here, and then rally, and then pull back. And so this very shallow kind of trend line at a 45-degree angle just kind of takes all of that from mid teens forward. And then as we start to get a little steeper, coming in like 2022, 23, that's the second trend line. And then we start taking off last year in 2024, very steep. That's this trend line here. So we haven't even made it to this one. We're in kind of the middle of the channel up here. So things looking pretty steep, I guess, as far as we've definitely come a long way. Um, Today we have consumer confidence at the top of the hour. That should be a bit of a mover. I'm not sure the date they conduct the surveys for consumer confidence as far as what time of the month, but nonetheless, that should be one that shakes things up here. The stuff like housing numbers and jobless numbers. Uh, well, I guess less so housing numbers, but more so like jobless numbers will take a while to impact. You have job losses, and then those people go into the unemployment system, and um, a lot of that stuff takes a couple of months before it's really reflected in the job numbers. And then those numbers get revised. Some of the housing data numbers can jump around a little bit month to month in small jumps, but then you look back over 6 months and you kind of see more of a clearer trend. So our advanced decline line today is pretty strong here, up above 1,000. The breadth 1.8, now 1.7. If that kind of drifts up above 2, we could get some trending action. Yesterday morning, kind of just pretty much straight down off the open. The 15-minute got a quick move yesterday to its plus 20 right away. Tomorrow there's NVIDIA reports, I think, after the bell. And that'll be a big market impact. Yeah, scheduled for February 26th. You do have kind of a 50% retracement on NVIDIA. So we'll see what the earnings report does. Okay, so we just closed our gap here. That's actually a decent little inverted hammer with the tail closing the gap. So I won't have a 15-minute opening range breakout trade today. Thursday got a plus 20. Friday filled the gap. Yesterday got a plus 20. And then today filled the gap. And Friday filled the gap and ran to a plus 20. So getting some more movement. You can see the VIX climbing to the upper teens here. That's been helpful. Definitely some signs that we're getting out of this consolidation that we've been in the last couple of weeks. And kind of get a sense when I kind of get fewer emails and there's less trading chatter in Discord and things like that. Um, a lot of people will uh, just kind of throw in the towel when there's a couple of consolidation weeks and they just kind of give up, and newer folks anyways. Um, and then things always pick up when there's more movement, volatility, more stuff in the news about the stock market and whatnot. Then more people jump back on the bandwagon, start trading again. But if you think back to anything else in life, if you were going to med school or learning a trade or like a construction trade or plumbing, electrical, or learning how to do anything really, you think back to being a kid and learning to you know play baseball or something. If you just give up because you're no good at it right away, then you'd go through your whole life giving up uh, everything. There's very few people who are good at everything that they pick up right away, or whatever sport or musical instrument or endeavor. So the skill of persistence is a good one to acquire and cultivate. And just really just sticking with things in general. Commitment. When I was in college, I wrote down this little uh, saying or 3 words. It was uh, commit. So commitment, confidence, consistence. You commit to something, and then you do the thing, and you start to gain confidence. And then through that confidence, you build consistency. And you could reorder a little bit and say, okay, I'm going to commit. And then through that commitment, I'm going to be consistent day after day. And then that's going to build my confidence. It's not a direct 3-word order, but those 3 words, I found them pretty impactful for me through my college years. They were kind of a mantra. Getting a bit of a triangle here. I'm going to sit for the first 15 minutes. Kind of got these highs coming down, these lows coming up. So then what ends up happening is you might get a break, but then you're immediately met with the resistance on the top, or even lower on this 21 EMA. And so then you kind of drop down, you hit the lower edge of the triangle, raise up, back down till you get closer to the apex. And knowing that we have that consumer confidence at the top of the hour, that's probably going to be the waiting period for or the catalyst for the morning, I guess. On the top of the NYSE tick. Yeah, that's a good ICC when you let's see if I'm interpreting this right. When you're going long, you want to be in a lowish NYSE tick. Now, in the first 15, 20 minutes, the NYSE ticks aren't going to have as wide of a range yet. We actually started pretty high on the upper end. We're in the 900s, and then the lower end is only 400. So we haven't made it down to the zero line. Usually we'll, if we open up like swayed to one side, in this case, we're in the 800s, 900s at the open. We'll work our way down to the zero line. If we open with NYSE tick readings in the minus 1,000, minus 800, then we'll work our way up to the zero line in those first 20, 30 minutes. Yeah, see how this little doji hammer here got just a point or so pop, and then we met the 21 EMA. Didn't quite make it to this down trend line of the triangle, and then worked our way right back down. So even though it got a push off the high, it didn't get the follow through. Now we're getting more follow through to the downside though, which is good because we're outside of the triangle now. We've broken lows of the morning, broke lows of the morning. Yeah, there are a lot of times where we'll open with like an extreme reading on the NYSE tick plus 1,000 for the first couple tick readings in the first 3 minutes, and then we just slowly drift to the zero line. And NYSE tick really isn't as applicable until you get closer to 20 minutes in or so, till you have a bigger range established. We'll just say wait the first 15 minutes so it's congruent with the other with halfway backs and things. So kind of a big range here, but we're going to be at a 95. Full halfway back is going to be, it's going to be a little more than that. I'm going to sit tight here. I like it, but I'm not going to take it. Again, we've got it's a little bit messy so far this morning. General trend to the downside. It's a little bit big. 5.5 points was the candle size, but we got this 50 here and the 21. Feels like we'll get more of a push to the downside. What was this low tick? 44. And so our low tick was back here. Sometimes you just need like the first 15 minutes to get a feel for the speed and just kind of getting back into a rhythm to start the morning. And you need that first 15 minutes to do this. Kind of like your warm up in a basketball game. You go shoot around, dribble, shoot some free throws, pass the ball, get loosened up, and you can do that in the pre-market too. I had one friend who would always open a sim account and then kind of dabble around in the hour before the market opened, just to kind of get those jitters out and get a little practice in, even though it's a paper account. Then he'd switch to his live account at the NYSE Open, and that worked pretty well for him. Didn't quite make it to the 50. Now notice how we broke lows, and then immediately we started to form. We started to retrace a little bit and started to form a hammer. Now, the candle's not closed, so it doesn't really mean much until the candle closes, but it wasn't an immediate push to the downside. The breadth is a plus 1,000, so we got to go all the way to zero and then down to get to negative. So 10 more minutes till consumer confidence comes out. No matter what time frame you're on, the swing highs and lows are always going to be the kind of most important level. You can put trend lines and things. Our value area is actually above us. And you can look at, different things like moving averages and retracements and things, but the price on the chart, if you take out all of the extra stuff, the swing highs and lows are, the critical pieces that make up the market. Should have had that up a little bit quicker. Didn't quite make it to the 50%. It is valid. We technically have a tick divergence, meaning we've made a lower price after the NYSE tick made a low, but we didn't trade at 92 and a quarter, so didn't miss out on anything there. This first one came point away, so that's good. What do we have below us? Really just the gap, or the low, 50 and a quarter. So we could very well run there and push below that today. It's not that far away. Only time will tell, as my Taekwondo instructor as a kid used to say. We always hated that. We'd ask a question. Oh, time will tell. Time will tell. It does feel like we're going to get some things are turning and we're going to get a lot more good trading days. When we're in the consolidation period where we're overall have a tighter weekly range at the end of multiple weeks, we really haven't gone anywhere. If you just hold your cursor back on, this is beginning of November, just pick a level and then look to the right. Oh, we were trading right about the same price, for multiple months on end. Trading is a little bit more challenging. And we did have a really good 15-minute opening range breakout at the end of last year, November and December, especially October, November, December. But overall, the second half of last year saw a lot fewer trades than the first bit. A little bit of a drop here. January, February, March was considerably more action, especially on the halfway back trades. So those feel like they're starting to pick up more, at least from a couple of days last week. Yesterday showed a little bit more signs of activity, so that's good. Yeah, Jane, you can take the 15-minute every day. I choose to just take it on gap days because that's when you have a better chance of getting movement. But, as we saw on Friday, we're kind of seeing it today. Yeah, we filled the gap, but we're getting, what would the 15-minute low would have been right about here. So yeah, a pretty sizable move down already from the 15-minute low. And we're only 8 minutes past. So you're going to end up with, more trades, which means in that data set of more trades, you're going to have some more plus 20s, but also more stop outs. But if you can be there every day and be consistent with it, the various strategies, I guess, the various ways to trade the 15-minute, whether you're using the full candle all the time or -4 all the time, ended up being right about the same profitability over the last 5 years. So long as when the volatility increases, you go back to using the full candle. That was the caveat with the -4s. You can do -4 all the time, but if the VIX gets above 25, then you're going to want to bump it up. We got a low tick down here and a hammer. It's going to be a 75.75. It's already down at the low of its candle, though. Okay, so no go. Made a new low. But we did have a low tick, 54, and a low price. Oh, 54. 54. Oh, on this candle, we've got a low tick. So 54, 54, low tick, low tick. Let's see what we get if we can get a hammer. I'd take a stab at that for buying above. Even though we're in a strong downtrend, could get a little pop into the number, but first we would need to form a hammer. $75.50. And doji close enough. It's kind of the doji part is in the top third. In a low tick. Let's see if it wants to push above. A little bit. It's got to get some legs though. $73.25. It would be the candle's low. We could draw a retracement like this. Getting some movement. Yeah, there we go. $73.25 is where I'd put the stop. If you use just keep trailing each candle. If you're gonna use other drawings here, like drawing up a opposing 50% retracement to manage the trade, the more optimal. Well, let's get through this trade and then we'll talk about that. Gonna draw the full halfway back on the day. Wonder if something was leaked or someone knows something early here. 76.75 is the low, so the stop on this guy. Technically, the candle hasn't closed all the way yet, but it will in a second. There it goes. Yeah, in that low tick is what's super nice about that counter trend trade. You get a low tick at low price. Those are great. Or high tick at high price. Nicey tick is definitely a super helpful one to pay attention to. And really not that big of a candle, 4.25 points. So we're going to be at 83.25, about 5 seconds. Kind of getting an inverted hammer here. Okay, move it. There it goes. Okay, not bad. Actually, kind of nice to get out of it before the consumer confidence number. Didn't flip it here on this inverted hammer. I love the placement at the 21. We got 2 minutes till that number, though, so It'll probably get a decent move, probably make it all the way back down to lows, actually. But just going to sit tight for the next couple of minutes. Great run, actually, off that. I mean, we see these all the time. Inverted hammer just under the 21 or just on top of the 21, close to the 50%. Didn't quite touch it, but yeah, I'm okay not reversing that though, just given our time frame. But so with the hammers and inverted hammers, with any strategy really, from my experience and looking at different trail stop approaches over the years, basically using the same approach, but occasionally, I guess, testing out or looking at different options, or talking to traders who use different options. Using the trail stop that keeps you in the trade the longest is going to give you the biggest profit. Saying it out loud, that's pretty obvious. If you let the trade run for the biggest gain, you're going to walk away with the biggest gain. Now, over a larger data set, in order to capture those bigger winners, you typically need to give your stop a little bit more room. One way we would do that is to trail, in the case of a long, trail swing lows, let it pull back and then bounce, and let it pull back and then bounce. So I guess we'll say from a short perspective, like yesterday, let's say you were long, anywhere, doesn't matter what your entry is. If you're going to trail swing highs and then let the market come down and then let it bounce and then let it come down again and trail the next swing high and then let it come down and bounce and then trail the next swing high and continue to trail swing highs like that on the move down, that's going to give you the biggest return on the trade, because you're giving it room to run. If we were to trail each candle on a move down, you're going to get taken out quicker on a little break above the prior candle's high. You'll lock in profit quicker trailing each candle. You'd lock in profit even quicker if you had a 2-tick profit target or a 1-point profit target. That would be considered a scalp. And so knowing that the most profitable exit strategy is to give your trade room to run. Really nice sell off here. Yeah, it's too bad it was right on the number. I guess this bar was the consumer confidence number. Low tick 8 o'clock, and then we went lower. So technically we have a divergence. We'll draw this up. Our 30-minute low is going to be here. This 75.25 is a little bit too big to put a limit order right at it, because 2 points is going to keep you inside the 61.8. So let's see if that trades, and then we can assess. You did have a little micro here, but let's digest this here and see what we get. 50.25 is our weekly low, and we are getting fairly close to that. 50.25. I'm going to just put a line out there for that. So basically, the short answer with exiting a trade is you always want to give yourself the option or the opportunity for that runner, because catching that occasional 10, 15, maybe even 20-point runner offsets. I mean, that that brings in so much extra profit off of a 2 or a 3 or even a 4-point stop that not only does it give you physical profit, but it also gives you the mental. We got this 30-minute low pretty close to this hammer here, and we have the tick divergence. Um, I only liked this reversal because we had the low tick at lows. These other couple, we didn't see a push above the hammer. Didn't see a push above the hammer other than just initial, one little bar, and then we sold off. So I'm not too keen on taking more longs at this point because we have the tick divergence. If things change or if we get a low tick at lows, okay, that'd be a different situation. But yeah, with exiting the trade, if you only have one contract, trailing your stop and letting, like, that's going to be the most profitable exit point, giving yourself the bigger runner. Um, if you do like a small profit target and you only have one contract, you can increase your winning percentage, but you really hover around break even because you don't have anything larger. Let's say you have a 65% win rate and you're doing a +2 -2, which is basically a scalp. Not, yeah, it's basically a scalp on ES. $100 risk, $100 profit, and you're going to try to trade a bunch of contracts. You really have to get your winning percentage up to like 80% to give you some wiggle room on that kind of a trade. And so to help combat the space between bigger winners by using a runner, let's say you have two contracts, what you can do, what I used to do, is use a smaller profit target. So that's where using that 2 or 3 point profit target, we'll just say 1-to-1 on the first contract. 1.5 is a little bit nicer because it can help cover, commission and whatnot. But I would use a 3-point target and using a 2-point stop on the retracement trades and use a 3-point target. And that would get me a little quick win, reduce my risk, but then I'd still have the other half of the position for the bigger meat of the move. And so that's been the most achievable way to stay in those runners because it's easier said than done to say, oh, yeah, I'm just going to hold this trade till it goes, +20. And that's one reason the 15-minute opening range breakout is actually a really good strategy to use because it's a good exercise in itself to sit on your hands after you get in the trade, do nothing, let it work its magic, if you will, and just let it run. And so, if you come in and you try to do like a wide stop and a small profit target, like let's say a 4-point stop on the 15-minute and a 1-point profit target, you might catch, 5 1-point moves 5 days in a row. And then you have 2 stop outs and you just wipe out your entire week's gains. And so the scalping approach, you really have to have a high winning percentage right out of the gate. And if you get into any kind of funk or period with a drawdown, I mean, you can do massive damage to months and months of gains. Whereas if you get into a little funk or drawdown period with, this style of trading, in any given day or week, you could have a 10, 15-point winner, even if it's only on half of your position. And that can really, quote unquote, make up a lot of small losses. So even this little hammer here, almost 8 points just by trailing each candle. So Now, this is a perfect example, actually, of let's say we were to trail swings to try to catch a bigger move. Well, this trade, you're giving up the whole trade. Let's say you started with a 3-point stop and you're going to trail swings. Well, it never made a swing. It came back down. So you're out for -3. And so that's where if you want to, as soon as I always say trading one contract is the hardest thing you can do because you only have one exit point and you're constantly going to be questioning yourself. Oh, should I trail or should I use a profit target? And so getting to two contracts and using two exit approaches, whether it's a 3-point target and a swing, trail the swings, or trailing each bar works very well for the 1 minutes. So that in itself is a trail stop technique. I mean, you can catch. I mean, this one was almost 8 points just by trailing 3 bars. But on smaller trades where they're not moving quite as big, you can still catch 10, occasionally 15 points on a big string of clean breakout or breakdown. So that in itself is a trail approach. But if you were, you could trail each bar as one approach because that's going to reduce your risk fairly quickly and get you. A lot of times you'll walk away with a 2 or 3 point gain with a small profit like that. Or so you do that and you trail swings as your extended runner, or use a fixed target of 3 or 6 points. I wouldn't really call 6 a small profit target, but you could do something like that. But always giving yourself the runner, I think, is the key. And then having that smaller first target is helpful more so mentally and allows you to get to the larger target. You're not thinking, okay, I got to sit here for this 15-point winner. All you're thinking is, all I got to do is get a +3 and I've locked in some profit, reduced my risk. And that's a lot easier. We're going to get an inverted hammer here. It's going to be a really big candle. I don't love how close to lows it is and how sideways this consolidation is. This is the 30-minute low, 59.71. And let's back out a little bit because we're getting a little bit messy in here. Turn all this off. So overall, our trend is down. I know we're kind of going a little fast today. Just the pace is a little bit higher. So you can go back and review the recording if you think that'll be helpful. But filled the gap. Our 21 EMA is not quite caught up to where we're at, moving down. Overall, each bar has made, for the most part, a lower low, but not broken the prior candle's high. So the downtrend is clearly the direction of travel here. And so one way to simplify your trading is to say, okay, what is the trend on the 5-minute? I'm going to go with that trend because even if I goof up the entry, I still have the momentum. The train is still moving this direction. It might change directions, but overall the momentum is down. So I'm going to kind of carry that with me and try to shoot off trades in that direction. Then as you start to expand and say, okay, maybe I'll take some counter trend trades, then you want to look to the NYSE tick and make sure it lines up low NYSE tick with low price as a long entry, or high NYSE tick with high price as a short entry. The next level up from that would be a relatively low tick to get long, or a relatively low tick to get short. So if we just pick any of you can see the downtrend here on the NYSE tick. And so you pick any of these, say 805, 810, probably going to be in this consolidation. So here's the 810. It's not the highest tick of the day, but a high tick that kind of sticks out above. And so using some of those cues off of the NYSE tick is really helpful. These candles are a little bit big in here. We're talking 6-7 points just for the candle. And let's take a look at this one here. Did it retrace much? Sometimes you can't tell. It's actually really nice having the 512 tick chart side by side because sometimes you can't tell. And when you're looking at the 512 tick, it's a little easier to see what's going on within the 1 minute candle. 65, 63. So it's still held its 3 points, getting a little bit of a move down here. That 50 and a quarter, we're coming up on quick. So that's going to be a really key level here. We'll probably shoot right to it, maybe break it, and then get a bounce. But we're going to want to watch that really closely. Probably could have looked at this as a bear flag. It would have been a very long consolidation bear flag, but thinking about it here, being right underneath the 30-minute low, the fact that we came right to that and reversed, I probably should have jumped on that. And even the 21 was awfully close. Because the distance, now that I think about it, between the low of that candle and the 50 and a quarter was, that was alone was 10 points. So that gives us some wiggle room. Oh, good question, CC. So a day like today where we start with nicey ticks high and then we come down, it doesn't matter if it's a plus 400 or a 0 or a minus 1,000. If it's the low tick of the day, like we had back here at 54, the low tick was only minus 120, but relative to where we started at plus, we'll just say almost plus 1,000, it was basically 1,000 lower. So the key is that it's the lowest print for the day. Some days you never make it to plus 1,000 minus 1,000, and then other days you're trading plus 1,000 minus 1,000 with a huge range. So yeah, nice, John. That I probably should have taken that inverted hammer. I didn't like it because we were so close to lows, but then as I zoom in and just kind of see the size of the candles, and we had a decent amount of room, 10 points between this kind of our next support level. That would have probably should have jumped on that, but that's okay. I'd rather miss or pass on a valid entry than take a lousy entry. Like I'm okay if I miss a trade, but if I get, you're starting to feel frustrated and you just jump in a trade that doesn't even meet your criteria, that's a lot worse. You don't want to do that. Rarely does that happen, but so we made it as far as 53. Yeah, that's exactly what I'm looking at here. This 50% retracement be a 60.75, but your stop is within the 61.8. So shoot, this already traded. This is what I wanted to take here, 56.50. So that's where the hammers and inverted hammers come into play really handy, because if the retracements are big, you don't get always get an opportunity to put a limit order out there. And if you don't get a follow-up 512 tick chart setup, sometimes it can be hard to get in. So that's where you want to take the inverted hammer at a 50% short. So yeah, compared to the last handful of Tuesdays, compared to the last couple of weeks, we are rocking and rolling here in this market. So this is good signs. Kind of feel bad for the people that, they always throw in the towel 1 week early. The people will be new to trading and try it out for 3-4 weeks, and it just happens to be a consolidation period. Oh, broke close and immediately popping here. And then, last a month and then throw in the towel, and it's just like, man, it's good things come to those who wait. Just think about medical school. I couldn't even imagine all those years plus residency plus everything else that goes into it. Even in an architect, when I first went into college, I wanted to be an architect and started doing the math on how long I'd be in school and then what you make coming out of school. And man, you really got to love it if you're gonna go that route. Bit of a hammer, but no low tick. The fact that I missed a couple of these trades in here doesn't help. You start to you miss a few opportunities, and then you don't want to force things. Okay, good. Broke that low. So this is that weekly low that we're testing, trading around here. This is the 50%. So we're basically at the daily halfway back. And so we're going to want to look for a 50% retracement on the daily chart to buy puts. So keep that in mind in the next, I don't know, maybe towards the end of this week. I don't love buying puts on a Friday just because you have the time decay over the weekend, but a lot of times you're going to get the gap down on a Monday. Man, this is a frustrating one. Well, the good news is there's lots of good signs that conditions are changing. I mean, you had the reversal one up, reversal inverted hammer here, and then two more inverted hammers with trend going for almost 10 points. This one's well over 10 points. So pretty solid signs that conditions are becoming a lot more favorable. So it's just like if you know, sometimes you have a appointment or something during the trading session, you can't trade for that day. And I don't even bother going back and, dissecting the day, because you're only going to pick out the trades that, the good trades. It's hard to see failed trades or, trades that you would have been stopped out on. So you look back on the day and you say, oh, it was a great day. I missed it. I should have been there. Well, you don't know exactly how you would have traded and all those sorts of things, but you're not going to catch every single day. That's one reason another reason I've leaned on just using the 15-minute on gap days only, because there are occasionally days where I will open my charts, see we're at 1-to-1 breath, see we filled the gap, it's an inside day, and I'll close down 20 minutes in. I won't even wait for the hour and a half. Yeah, let's look at our next gap fill, CC. We have the one we just, well, that wasn't really a gap fill. That was the low. But our next gap fill is a 91. We really don't have too many up here. We've done a nice job. That's what happens with consolidation. You have a lot of overlap. And so we've got the all-time high, 54 close, and then yesterday's close. And then now this 91 is from way back in middle of January. So 91, would not surprise me if we rally into the close on a day like this where we break the low, but also wouldn't surprise me if we sell off and drift all the way to 91. You get these little, I say little, but you get these relatively small sell-offs compared to on the weekly chart. Look at how much we've come up on the weekly chart. So these sell-offs here can seemingly start small, and then as more so bigger investors and institutions start to dump shares, people start calling in, hey, I want to get flat and sell my positions. Unfortunately, a lot of times what happens is it happens like here at a double top, and people sell out, and you get a move down, but then they never get back in, and they miss all the growth. So that's why it's always been my approach to not dump my long-term positions and try to pick the top. I just buy puts against it, and then use those profits to buy more shares. Go on this 45.75. Right at the 50.25. Nice. I bet this rolls and continues that trend. It was right at the 50. I didn't have the 50 drawn up, but I could tell when I was looking at the trade ladder at the 50.25. Okay, 41.25 is going to be the high of this candle. Broke the opposing. Yeah. That's the best when the next candle forms at the low and breaks. And then if we can get it to close, that'll be a big stop move from 47.25 to currently it'd be 41.25, but don't turn and push. Give us our 30 seconds down here. And a low tick too. This might push up too much before. There it goes. I mean, about getting a little bit late in the series of moves down. I'm still good with this one, but you have 1, 2, 3, bunch of them. Okay, so we're at 44.75 is going to be the high. It's probably going to push up above. This does have a low tick at lows. 7.5 point candle. I'm not going to flip this with the 50 right here, or the 50.25. Time wise, though, an hour in is usually when you get a reversal. Didn't quite make it to this full halfway back. You could. I don't love the 50% here when you have a touch. The way you drawing it like this, where the 50 has already touched the lower high here, didn't quite make it to, and then now it has. Not quite used to how fast the market's moving. But I'll take it. Let's take a breather here. Yeah, some platforms use different closing prices. So this is the 415 close 91 58.91. Um, it's going to look a little different if it's using. So that'd be like the settlement close versus. So like this would be the settlement close versus the 4 o'clock close, and that's almost a 10-point difference. SPY weekly close or weekly low 50.49, and we are at 90.49, and we are at 90.73. Yeah, so we're basically right at that low. Yeah, it'd be nice to get a. We need more of a push down before I would just go ahead and buy puts, but um, assuming we do break lows, then watch that 50% as a retest, as a place to potentially buy puts. Ideally, it's a little bit lower. Like we come lower before we get to draw our 50% retracement. Yeah, if you were going to trail swings and you end up in, let's say, this inverted hammer way up here, and you're trailing down and then down, lower low, lower low, lower low. Here's your bounce. So you're waiting your stop at -3. You're waiting all the way till this inverted hammer before you're moving it. I mean, you're in an unrealized gain on your trade ladder, but that's pretty. That's the hard part for most people to sit through, not having your stop, super tight. And then here, and then down, 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 bounces. Here's the next movement. Down, 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 swing high, down, swing high. So basically, you're still in the trade with your stop here, above this inverted hammer, because this is your low and this is your swing high. I mean, that's 41. That's monster. 41.83. So it's and maybe even you could say going back on this first little double top, low, high, low, high. Yeah, that would have kept you in the whole day. 6,000 all the way to here. So trailing swing highs and swing lows, like, I mean, that's the best way to stay in the trend for as long as the trend is going. But doing it in actuality, having a smaller first target is a really helpful way to lock in some profit, reduce your risk, be able to sit back a little bit and say, okay, cool, I've cut down my risk on the trade, and if this thing runs, I'm in it. And yeah, I mean, how many 40-point trades would you need to make to make a great month? Not that many. So, all right, I'm going to pause here and just grab a drink. Not a cocktail, just refill my tea. All right, let's see where we're at here. Did get a low tick at the low price here. Traded in pretty far though. Overall, trend is down. Traded below the weekly low on the ES here. Big body trend day so far. The daily bar doesn't mean much until we close it, but definitely make for some good intraday trading when you're just hugging along the 21, down, down, down. That's good stuff. Traded at the 50 at the negative 23. You can see as we draw the next retracement, it's going to break the 61.8. Low tick at lows, so then you would turn around, start drawing in the other direction. Full halfway back is going to be way up there. Look at that. Lines up right with the 30-minute low. Let's see, Mike. Zoomed in on my most recent activity. So do you mean like when I zoom in like this, real small on the 1-minute chart, and then if I like slide to the left and right, or on the y-axis if I go up and down? There is this new chart navigator here. I have it turned off, and you can scroll. It's like that's just really in place of the scroll bar. Inverted hammer here at the 21. I may, yeah. Let's see how this. We had that low tick, but just gonna watch this guy here. We have that low tick with a decent sized bounce. This may be the end of our inverted hammers rolling into new lows, at least for this part of the morning. We're at that hour marks. Yeah, there it goes. Okay. Back at that 50, 25. Yeah, you can tell the downward momentum shifted. Here's the swing high. And technically, this is the swing high, even though it's one candle. But we're breaking the most recent 50% retracement, 61.8, is kind of the quantifiable signal that the momentum shifted. You can start coming in here and drawing 50% longs if you want. Yeah, I don't have anything super fancy set up, like settings wise on my charts, but it's possible that I do have a setting that slightly different. I know I think it's something with include studies. Let's see here. Under chart style settings, and under price access, maybe fit studies can kind of goof up if that's checked. I know that that changes my nicey tick chart a little bit. But you can always take a screenshot and email it to me, and I can help you with that. It's probably a simple fix or adjustment. I don't love how we're trading underneath the weekly low here. That was starting to form a hammer. Now we're tagged up on the 50. It'll probably rip. I mean, 57 is the 21, I guess. That looks pretty good. A little big. Now we're right at the 50. Now I don't like it as much. If it was a small hammer down here, right there though. 49.75 on top of the 21, touch the 50 as a long, kind of targeting 57. It's decent. This 50.25 was resistance the last time we came up and touched, and same with poked in a little bit, but just gonna leave the stop at 3 points, and then we'll move it to this candle. There we go. Broke that candle, the swing high. That's what we needed. So 48.25 would be the. We got 45 seconds, but that's what we're projecting here as moving the stop. So I look at that. Okay, so there's not much to do in the minute that you're waiting for the candle to close. So I look at that 48.25, and then I'm ready on my trade ladder to drop it there as soon as the candle closes. I don't have to look at it again, and my mouse is already over. Like I look at that spot on the trade ladder, so I'm ready to move it there. And yeah, you might only be saving a few seconds, but sometimes that's the difference between getting the order in and just trying to be as smooth as possible. So there you go, move it. And this is probably going to retrace this whole bar. When you get these big bars like this, it's really nice when we stay up in the top of the bar and don't retrace it. But yeah, that's a big retrace. And all the way down. Well, it was worth a shot. That was a nice little pop initially. And again, doing the smaller first target or just trailing each bar at least reduces your risk. I know some are doing with the I don't know, forget which one it was, Top Step or Apex, but one of those what are they called? The prop firm deals. It's like you have to how am I trying to say? Your drawdown is based on the price within the trade. So if you let a trade go plus $1,000 and then come back on you, your trailing drawdown moves off of that intraday, that intra-trade drawdown. So you don't want, you want to exit the trade close to max profit. So the way I've kind of helped some of those traders doing the combine deal pass it is using a fixed target so that your like a 8-point target on every trade just to get out of the trade at the most profit, at least at that point. Even if it goes 10 points or 15 points, you're um, you're getting out without leaving a whole bunch on the table, I guess is the deal. So a 6 or 8 point profit worked really well for that. And then they're able to pass the combine. And then once you get in the live environment and start building up a cushion, then you can kind of go back to the giving yourself more room to let it run, and you're not so concerned about those initial parameters. So all right, I think that's going to do it for me. Not too eager to take much more down here. I wouldn't say it was my best trading day. Missed a couple of these inverted hammers, but overall, super happy with it. Catching the first run, that little long actually. Out of all the hammers, I think what I'm most proud of today is being able to identify that, okay, we had some tick divergences, and these first bounces were not getting follow through. And so, if I came in here and took every counter trend trade, you'd end up with, a whole bunch of stop outs. So taking this one was key, or what made it work. What the key to that one we took was that it lined up with a low nicey tick. The low tick of the day lined up at the same time as the low price. And that one got a decent follow through. Probably could have flipped it, but the time period being 2 minutes before the consumer confidence number is what prevented me from just rushing into the next trade. So I'm okay with that. These next two probably could have been a little bit more aggressive, especially with banking, an 8-point move already. But seeing how the last couple of weeks, I've had a lot of space in my trades. Thursday last week, I had a 10-pointer. The Thursday before, I had a 6-pointer. So it's like not really bagging a whole bunch of 8-10 point moves in a week. So kind of not just rushing into trades and then all of a sudden you're 10-point profit. If you give a bunch back in losses, now you're only up 3 or 4 points on the day. So I'm okay with kind of being a little bit conservative today. Seeing how yesterday was a solid day, today another solid day of activity, movement, trade setups, cleaner market. Yeah, I'm super happy with how things are going. This is kind of what I thought would be happening right off of the inauguration, is more of a bigger sell-off, a jump in volatility. So we're starting to get that now, which is at least helpful for us as traders. Maybe not so great for the economy and for individuals, but if you got your ducks in a row and you don't have a whole bunch of debt and you've raised your cash position so that you're positioned yourself for opportunities when they do arise, you have the access to the funds to either add to your long positions, to buy puts, to buy a whatever. Buy when things are low. You're putting yourself in the right headspace to do that. You don't want to be chasing and jumping into the market when everybody else is jumping into the market because it's run for so long. You want to be, buying when it's not as glamorous and sexy, and then forget about it for a while, and then let time do its thing. And then when the frenzy comes and everybody's talking about it, you're already in it and can slowly be unwinding and taking your profits. So the same concept kind of applies with the intraday stuff. You're buying at a 50% retracement or you're buying above a hammer early in the trend, and or we could say a continuation of the trend, but you're selling when the market's coming up. So you've identified the larger trend is down in today's case, and you want to be short, but you don't want to just sell lows. Meaning, maybe today's a bad example because we've broken through lows and got follow through. But uh, you could sell lows, or you get a little bit better price by selling below an inverted hammer on a bounce or selling at a 50% retracement. And that's going to cut down your risk, decrease, the stop size that you would need in most cases. Today, breaking lows and dropping is kind of been the trend, but nonetheless, always focusing on the risk side of the equation first and not just rushing into, oh, how much money can I make on this trade? I normally trade 3 contracts. Let me trade 9 contracts because I want to make a whole bunch of money. That's how you can get into big trouble. So we will leave it at that for today. Full halfway back is going to be at the 50% retracement. I'm a little short on time today, so even if we were trading at it, I got to jet and then get back. This afternoon I am doing a guest webinar deal. I'll put the link in the chat window, and it will be on fib retracements. It's for a Elliott Waves, I think, deal. I should know, but I think it's Elliott Waves. And that will be at 3 p.m. Eastern time. So I can get my ride in and then get back and then do that webinar. And then shortly after that, pick my daughter up from school, and then the day is about done. So if you have questions, shoot me an email or drop in the Discord, and I'll try to get back to you later this evening. We'll catch you all later. Thanks for tuning in, everyone, and we'll talk to you soon.